Onto your markets news now. Asian stocks ended the session mixed. This ahead of the US Fed making its call on interest rates. Market players are hopeful that the People's Bank of China will provide stimulus in its announcement on policy this Friday, given the difficulties that China's economy has been facing. The Nikkei share average declined by 1.03%. The Hang Seng Index rose by 1.34%, while the Shanghai Composite Index closed down by 0.5%. Over in the United States, stocks closed mixed yesterday, although the Dow Jones hit a new all-time high, while the tech-heavy Nasdaq actually fell on the day. Market players are said to be fairly cautious ahead of the US Fed's call on interest rates tomorrow, with the market now widely expecting a 50 basis point cut in rates rather than 25 basis points before. The Dow Jones Industrial Average rose by 0.55%. The S&P 500 ended the session up 0.13%, while the Nasdaq Composite Index fell by just over 0.5%. Well, the JSE is in the green today, with the all-share index gaining 1% at 82,766 points. The rand is trading at around 17.62 against the US dollar, 23.26 vis-a-vis the pound, and 19 rand 61 against the euro. Looking at commodities, gold is trading at $2,570 and platinum at $981 an ounce, while the price of Brent crude oil is trading at around $72.40 a barrel. Well, to break down the markets for us, I'm joined by Fahima Adia. She's a portfolio manager at Momentum Securities. A very good afternoon to you, Fahima. So I see that the market players are now betting on a 68% chance of a 50 basis point cut out of the United States Fed tomorrow. Is that not wishful thinking, given that just 2 weeks ago, some people were saying that if the Fed were to cut by about 50 basis points, that would signal panic or pandering to the market?
Afternoon, Nampo. Thanks for having me. Yes, so I think basically the market right now is feeling as though the Fed has maybe been a bit behind the curve in terms of the rate cuts, given this latest data that we saw come out from the US last week. So we have seen that the CPI number has moved pretty much in line with the target rate of what they're looking for, of 2.5%. And we've also seen that labor market has cooled quite significantly and is also around that area that the Fed is looking for. So I think given that the data is now in place, of what the Fed was looking for, the market just feels like in order to keep the GDP growth where it needs to be, in order to ensure there will be that soft landing, the Fed perhaps now needs to cut rates more aggressively than what they were initially saying. Yeah.
So yesterday, our local market closed almost flat, positively, but basically flat. What's driving activity today? I mean, we're doing quite well, up about 1%, and presumably most of the focus is still on what's going to happen with interest rate here in South Africa in terms of what the SARB will decide.
Yeah, exactly. I basically think it's just that whole interest rate cutting cycle that we're expecting to start this week locally. And that's what's also driving our market. So, yeah, very good performance today, up almost 1% on the JSE. And, yeah, I think we're probably looking for a 25 basis point interest rate cut our side. And that will probably see further strength in the markets this week, I would think, depending on what happens also in the US at this point. But overall, I think it will be a positive time for markets given these interest rate cuts.
So in the run-up to these major interest rate decisions, the gold price has been flirting with highs. Just explain to us again the relationship between, the gold price and impending rate cuts.
So it actually has an inverse relationship, I would say, because gold does not generate any interest. When interest rates are cut, it's generally seen as a positive for gold, because then the investor is not losing out on that opportunity of earning interest. So I think what's really pushing that gold price higher now is the fact that investors are expecting a higher interest rate cut of potentially 50 basis points in the US. And on the back of that, we're also seeing the dollar weakening, which means it makes it now cheaper for foreign investors to purchase the gold. So all those factors combined is basically what's pushing up that price.
Okay, now let's take a look at a couple of companies that have come out with their annual results. Real estate investment trust Hyprop Investments, they reported their annual results for the year ended June 2024. Net operating income up 6.1%, headline earnings per share down 24%, although their dividend to shareholders is only down by 6.4%. These guys have a property presence here in South Africa as well as in Eastern Europe. How do you think they're doing?
So it seems they're doing decent. I think considering the difficult macro backdrop, they also had quite a difficult time in sub-Saharan Africa. So in Nigeria and Ghana, they've obviously been impacted by the currency devaluations there, and they are looking to completely exit that market. So I think considering, the environment, they are doing well because they've got a lot of exposure to shopping centers. So the consumer being under increased pressure will obviously have an impact to some extent, and that's why I think we're seeing a bit of a decline also in that distributable income per share. But if we basically just look at, the operational performance in more detail, they did say that it was stronger than expected. So they've actually reported a better distributable income than what they had guided. And the performance in South Africa and in Eastern Europe is actually showing pretty good, strong improvements there. So I think that the pending interest rate cuts will probably be quite good for a company like Hyprop.
And Outsurance, the insurer, they also came out with their annual results for the year ended June 2024. They reported normalized earnings up 20.3% at 3.5 billion rand. The full year dividend is up nearly 30% at 174.4 cents a share. And they're also throwing in a special dividend of 40 cents a share. Your reading of their results and how they're doing generally?
Yeah, I think it's been a great set of results. In general, Outsurance has been doing quite well. If we look at the stock price performance, that's been up almost 32% over the past year. And if we look at these recent results, it's beat consensus expectations and what the market was looking for. And they're basically saying that that strong operational performance was driven by the performance of Outsurance Life, also good investment income, and the funeral segment of side of the business has been doing particularly well. Going forward, they also have plans to expand the business in Australia, and they've also now entered the island market. So quite a lot of plans for CapEx going forward and expansion. So overall, a good set of results.
Excellent. Thank you so much, Fahima, for your insights there. Fahima Adia, she's a portfolio manager at Momentum Securities.